Hello, good morning and welcome to today's morning report on Thursday the 9th of April with me, Rich Perry, market analyst at Handtech Markets. European sessions got off to a fairly solid start really, nothing too significant to the upside, about 0.4% up on these markets, and that's sort of come amidst a little bit of a positive session that we had on Asia overnight. Nikkei up 0.7% on the back of a weaker yen. Wall Street closed just slightly higher with the S&P 500 up 0.3%. Basically, the FOMC minutes that we had that everyone was basically working towards yesterday, certainly all the forex markets were consolidating in front of it, but the FOMC minutes came out very slightly hawkish actually. There was a bit of a obviously moving into it, the market had been sort of guided on a slightly dovish set of minutes. The Fed is data dependent, and that continues to remain the theme really throughout the minutes. However, there was a fact that the Fed committee was slightly split in terms of where it expected to hike rates. There was some talk of even June. Some others were saying later on in the year, and perhaps even into 2016. So an interesting split on the committee there, and that sort of the sheer mention of the fact that June was a possibility sort of led to the market to take that as a more hawkish lean slightly in those minutes, and that subsequently meant the dollar strengthened overnight. We had the dollar index jumping, and it's back above that 21-day moving average, and now you'd sort of be looking out for this reaction high at 98.66 to be breached. If it can breach that, then you'd sort of suggest that that is beginning to sort of resolve this consolidation that we've got at the moment back towards the upside again. But at the moment we're still not seeing a decisive break on any of these charts. I'll talk you through euro dollar, cable, dollar yen for example, and they're still slightly in these range plays, but very interesting moves that we've seen subsequently to that those FOMC minutes yesterday. Now, this is the hourly chart on the on the dollar index. Just shows the gains that we've seen, and the sharp move to the upside yesterday on the minutes, and then that's continued subsequently today when we're looking to test, as I said, these highs around 98.66. Interesting move that we've also seen in the oil price. It's backed away from that resistance around $54. You're not yet breaking this sequence of sort of higher highs and higher lows, so that the uptrend is still intact on that chart, but the backing away from that resistance is a slight move that would suggest the bulls are not yet ready to break out, but it doesn't necessarily mean they won't, because certainly the support that's formed around that $50 area is still remains sort of on a near to medium term basis. Over the past few weeks, the outlook remains pretty positive. So that takes me to today really. What are we looking out for? Well, we've got the UK trade balance at 9:30. That comes out in a few minutes, and the expectation is for 9 billion. So slight deterioration down from 8.4 negative of a deficit. So that is takes you back towards sort of this sort of area here, and 9 billion. And you would argue that there has been a slight general improvement in the trade balance in the last few months, but I don't think you'd get too excited until you're seeing sort of I'd say probably maybe a consistent move below 8 billion, which would be an 8 billion deficit, which would be sort of a year, 18 months of highs. So you're not really seeing too much improvement there, and sterling would react negatively to a miss on the downside on that number. You've also got the Bank of England meeting today. We're so close to this election in the UK that the Bank of England would not be able to really move on interest rates for the issue of being deemed to be politicised. So I would almost guarantee that the Bank of England would not be moving on interest rates today. It'd be a very bland statement as per usual. And then this afternoon we've got the weekly jobless claims. Last week was 268. It's expected to just jump slightly back to 285, but still there has been that would be 5 weeks in a row of numbers below 300,000. So that would be a slightly positive take on that. But anything better than that, 284 would be considered to be dollar strong. So that takes me on to my chart of the day, which is the DAX index. Now this DAX chart has certainly, I mean, it broke that uptrend, and you could argue even that uptrend may be beginning to become a base of resistance. But at the moment we're sort of trading sideways in this consolidation phase. Looking at the momentum indicators though, it is a bullish consolidation certainly. The RSI is still forming above 60. That's positive. The stochastics have even turned higher again, in the last few days. So that's a positive. MACD lines are certainly positive as well, holding support above this 21-day moving average as well. That comes in at 11,940. And just looking a little bit closer in, you'd argue that this downside move that we saw yesterday, that was about 80 pips actually to the downside, which, to be honest, in the large scheme of things, that doesn't really reflect any real damage on this chart. And you'd certainly say that you're sort of gaining this higher lows sequence in the past couple of weeks, and it's moving towards a test, arguably, of this high at 12,219. So on this hourly chart, which is where you can see the uptrend coming in, you can see these the sequence of higher lows there, and it's interesting because we've held on to this latest break. We've got the higher low coming in at 11,950, which is the low from a few days ago, 2 or 3 days ago. And we broke out yesterday on a gap high. The day before on a gap higher, and we've actually now filled that gap quite positively. So that was filled yesterday afternoon, and we're still holding on to that. So that's a fairly bullish move that we've seen on the DAX, and I think that the fact that we're sort of trying to move and sort of hold above this resistance that we formed around 12,100. I think just suggests that generally we are sort of moving towards a test of the highs once again. Interesting that the RSI continues to play a role, certainly in the last few days. Anyway, the bullish configuration on the RSI shows this support coming in around the low 40s area. And you can also play the stochastics as well. Every time the stochastics have come back towards 20-30 area and turned higher, that has been seen as a positive signal, and we've just had another one again. So perhaps this is again an opportunity to buy on the DAX, because it certainly looks like it's pushing higher. Now I suppose you'd be looking out for holding above that support at 11,950. And also the support at 11,880, the two sort of reaction lows within this recent move higher. So those are the two lows to watch out for. But certainly, I think that the bulls are sort of manoeuvring for a test of the highs, and I think it looks okay at the moment still. So I wish you good luck in your trading on DAX, and I will speak to you later. Thank you.